Welcome to the Anatomy of a Strategy podcast.
I'm Tara Hunt.
And I'm Carlos Pacheco.
And we're recording this from our office studio at Truly Inc. in the sunny city of Toronto, Ontario.
Sunny for the moment. Sunny for the moment.
So we're just going to do a little intro to this particular episode because I have to apologize to Carlos. I completely geeked out and he was here in the room and I did not give him a word in edgewise.
I tried, but
he had ideas and I was just like so kind of starstruck because our guest today is Tracy Chong from Strata Insights, an amazing woman, big picture thinker. I saw her speak at the gathering in Banff a few weeks back and just completely like jaw dropped to the floor. So I was really excited to have her come and speak to us. And of course, we geeked out a lot over
drinks.
We did that too, but we geeked out on the podcast over just how you measure brand economics, which is something that Strata Insights, her and her partner have coined. And it's such an interesting concept. And just to give a really, really like quick high level overview, and then we'll shut up and let Tracy do the talking, is that brand economics is finding out like where your brand value grows. So they measure all the ways in which your customers are finding you and why they're choosing you and how they perceive you. She'll talk about the pillars. I'm not doing it justice, but then they're able to tell a brand, this is where you need to improve your efforts. And it's not necessarily the marketing channel. It could be operations, right?
Yeah. It's all part of that whole, customer journey situation,
Absolutely.
right? And it to me, as somebody who came in a little green to that conversation, because Tara had previous conversations with Tracy, I was blown away by the whole concept of brand economics and the fact that somebody's finally thinking that way, as opposed to like everybody being in their silos and doing their own thing and where marketing is doing its thing and then, customer service is doing its thing and manufacturer is doing its thing and nobody's talking to anybody and somebody's finally coming into companies and saying, hey, let's look at the big picture and what's the worth of this brand based on everything that's going on.
Yeah.
Anyways.
So in the era of ROI, we're going to shut up and we're going to let Tracy now take over and give us some schooling on this particular subject. And we will talk to you after the interview. And we are sitting here today in the offices of Truly Inc. with the amazing Tracy Chong of Strata Insights, president and founder, right? As well as a recovering marketer. What does that mean, Tracy?
It's interesting. I've been thinking about whether I'm a recovering marketer or a reformed marketer. The recovering part, I think, is from dealing with people who constantly want to see numbers and financial numbers. And frankly, there isn't enough calculations or financial calculations that have anything to do with marketing. And you can try and do campaign metrics and ROIs, but that excludes everything else in the continuum that influences purchase. So just like I don't believe sales gets 100% of the credit for, a sale, nor do I believe that any of the marketing metrics right now actually give a full story.
And to give you some background as to why Tracy is sitting here, other than the fact that I'm kind of making it my personal mission to get you in front of as many people as possible, because when I saw you in Banff at the gathering, you blew my, can I say mind? Can I say, no, bleep it out?
It's going to be bleep.
You blew my bleeping mind. I watched Tracy up on stage with her co-founder, Mark. You just show me a presentation that changed everything. There's very few times in life where, your entire paradigm is shifted, and I can put that on my roadmap of one of them. So speaking of metrics, you got up there and you said, you and Mark were talking about this idea of measuring the value of a brand, which is very interesting to me. And that's where the light went off. Do you want to talk to the audience who may not have heard of you, but will, of course, want to follow you and eat up everything you have to say after this? Talk about what brand economics is and like what does the value of a brand mean?
Well, it's interesting because a lot of people, first of all, the term brand economics actually is a new term. It was something that we coined because we were looking at other mathematical principles that get applied in daily life. Economics was, the number one foundation for pretty much any kind of dealings that have to do with the financial markets. And the intangibility of brand, being able to put an economic value on it. Now, some people are going to misunderstand that and say, okay, you're doing brand valuations. No, that's a certain methodology that's there. And then there's brand evaluations, and that's a slightly different methodology.
Can you talk quickly just about a brand valuation for those of you like myself who do not know what that means either?
Yeah, absolutely. Every year, there's a whole bunch of people that publish lists of the brands with the top values in the world. And there are different methodologies to doing that. It's all generally based on publicly available data. They go through their various methodologies of coming up with a financial value to the brand. Overall, they look at the market capitalization, they look at assets, they look at combinations of things like looking at licensing fees and what's the standard and applying that across there. But we did actually a really comprehensive review of all of the methodologies. And there isn't actually one methodology that has been foolproof. And there was Mark Radha actually did an expose at Marketing Week a few years ago where he showed that there was a difference anywhere between 113 to something like 300+% variance in the posted valuations versus the real valuations.
So the real being like what they would be trading for, say, on the stock market?
What they would actually be able to get calculated based on private information.
Okay, gotcha.
So a 300% variance is a lot.
Yeah.
So the point is that those brand valuations, people celebrate them. It's nice to see people on the top list. That's great. But there's no actionability out of it. It doesn't tell you why you went up or down. It doesn't tell you if you're going to be successful in the future. There's absolutely nothing there. So brand economics was coming out of it. As Mark and I were both working at a brand valuation firm, a lot of clients were asking, tell me why this happened. And we started to dissect it more and more. So is it the fact that it was the economy? Was there a new regulation? Did you do something new internally, like all of a sudden go to a digital model? There's a whole bunch of different things. And brand economics is looking at brand from all aspects of the business. And I think that's a huge point that people don't take into consideration, which is when you think about brand, you cannot think about it as brand equals marketing, because marketing can do their job flawlessly, and somewhere else where they're giving a bad brand experience, like say, I have to log in 3 times. Right. That's a bad brand experience that has to do with operations.
But most CMOs that are out there come from a brand background.
Yes.
Do they not? That's their...
Absolutely.
Right.
But the people that they work with don't actually see their roles as influencing the brand.
So, okay, let's step back. What is brand? Like, how do you define brand? Because I know there's like all sorts of ways in which people out there will define it. Most people even think of it as just the logo and the company colors, right? And that we know that's wrong. But how do you define brand?
I think it's the emotional real estate that companies own with a client or their customer. And that emotional real estate comes from a variety of things. You can't just say, I have an emotional connection to Coke. I got to like the product.
Right.
I have to like the delivery of it. I like to the convenience of being able to get it when I want it. The fact that when it blows up in my trunk like it did in the freezer, in the freezing cold weather, that somebody would have responded to me when I asked, does anybody know at Coca-Cola how to get frozen Coke out of my trunk? But it's part of
they?
No, actually, and I would think that somebody would know after this time. But the point is is that that was part of the whole customer experience, is like everything about that experience is consistent and it creates an affinity for me. I mean, you look at United Airlines, which is a case that I presented.
Yes.
And
this is a great case.
Perfect example where marketing built this amazing fly the friendly skies. It was incredible. And
describe this case from the beginning to the end, because I think it makes such a great.
Absolutely. I mean, if you look back, we pulled an ad all the way back from the early 60s, and it was about flying the friendly skies. And usually United was in the top 2 choices. You know, it is a price war a lot of times with flights, but from a business standpoint, there's some loyalty involved in it. So everybody knows about the famous incident where that man got pulled off the airplane. Now, what people didn't know was that it wasn't the primary United Airlines carrier. They had actually subcontracted out the smaller airline to do the smaller routes.
Right.
And so the first question is, does the company that they subcontract to operate in the same manner to deliver the brand experience?
Right.
So are they being as friendly? Are they being as helpful? Are they able to diffuse and train and all those other things so that the experience is similar? Because let's face it, it's got the United logo on it, so everybody's going to have that expectation.
Right.
When this individual did not want to get off the plane, the way that it was handled, because the head office, the president actually made some commentary that was not very positive about the situation. Right. So immediately, it's not explaining the fact that it was a subcontracted company, and here were all the things that were involved in this to help diffuse a situation.
Right.
But that decision is basically coming from somebody like operations, who to use, finance, because it makes sense to actually overbook people. It's a very cost-effective way to do that, and probably legal to some extent because they've got to look at the deal. But where was marketing? Where was the brand in any of that consideration of,
right,
did we pick the right partner to actually deliver on our smaller routes?
Well, as the CMO of United wouldn't have probably been involved in the partner vetting process, right?
But that's part of the problem. I mean, I get up on my soapbox all the time and say, frustration because every organization has KPIs that go across every division.
Right.
So you've got operational, you've got IT, you've got HR, like financials. Everybody has those KPIs. Brand is the only thing that does not have a KPI consistent across the organization. Mm-hmm. There is the reputation. We have to manage our reputation.
Right.
But if you don't put a metric to it, how do you stop the decisions like this, working with a partner that might be inferior or deliver a bad brand experience, if you don't put that into the system?
Right. So back to the brand valuation versus brand economics. So tell me if this is right. Brand valuation is more, I guess, like Uber, who owns nothing and no inventory and la la la. They were given huge valuation that made them gabillionaires, even though they have nothing to show. That's sort of is equivalent to brand valuation, or is that also kind of what brand economics is about?
No, it's actually still part of a financial brand valuation. So there is still a process. There's methodologies that are respected across tax laws in various countries. So there are standards that are there. Mm-hmm. But the point for a CMO, or frankly for an organization, is that's great when you're selling to a company, right? Or you're IPOing and people want to know what your company's worth. What about if you're not selling? What's your brand worth? And as an investor, when I look at your company and I see, 20% of it is fixed assets, that's great. And then 80% is intangible. And that's all I get as an investor. Okay, what makes up that intangible? How are you managing that? I see you're cutting costs. I see you're doing all of these other things like getting rid of real estate or all these hard costs that are associated with fixed assets. But what are you doing on the other side? Why am I paying a premium? You can explain part of it, but you can't explain the rest of it. And that's really the difference, is brand valuation attempts to do some of that.
Right.
But brand economics goes way deeper. It's like going in and getting your blood tested and having the DNA dissected to say, where is it going to be painful later on in life?
Right.
What are the things you should protect yourself from? What are the things that you can do? It literally is that kind of depth of diagnosis.
Okay, and that's brand valuation.
No, that's actually brand economics. Yeah.
See,
it is very confusing.
It's totally confusing.
It is very confusing.
So, okay, So let's say I'm a cosmetics company. So I do have a tangible asset and customers that buy, but I, sell through Shoppers, Drug Mart or whatever, and Sephora, whatever I distribute through those channels. But I don't know why all my competitors are eating my lunch. How would brand economics help me determine where I'm falling short, falling flat?
So this is the great thing about it is when you do brand valuations, they only look at a few things. With brand economics, we're looking at everything. So we will look at your customers, which is normal. Mm-hmm. We're going to look at the channel and see how the channel behaves. So could it be that you're not getting enough store training that's happening with people so they don't know how to talk about your product? Could it be that your distribution channels aren't putting in enough product in there and you're always sold out? So there's distribution issues. Could it be a product issue that it's actually just not a good product and it's not meeting customer expectations? Could it be the fact that you're, say, in Shoppers Drug Mart, but not in Sephora, and you're charging a premium price in a drugstore, and people don't want to pay a premium price in a drugstore?
Right.
Could it be that you're actually in Walmart, and as a result, that's taking your brand down because the perception is that great makeup isn't being sold in Walmart? So looking at who you're partnering with and how that can actually elevate or bring down your brand. It could be product, it could be the operational issues, but looking at all of those things and dissecting it, and we could literally have a pie chart that says, here is the distribution of all the different things that your company is doing and how it impacts your brand's ability to generate business and generate revenue. And that's the magic of it, is looking at all of those things. It could be, frankly, that when the employees are dealing with the channel or customers or even just your employee brand, that up on Indeed, all of a sudden you've got these terrible reviews of it's a horrible company and we test on puppies, right? It could be something like that, which people don't realize has an impact. So it could also be that more women are doing cosmetic surgery and there's this massive trend towards not wearing makeup anymore. Right. And it's impacting the use overall. So could the category also be going down? So looking at all of those different factors and saying it isn't just one thing, it's going to be a number of different things. You can't just diagnose whether you have, a problem with your lungs by clicking that thing on your knee to see if it bounces.
Right.
And that's kind of how I see brand valuations, is they kind of poke around at a couple of spots.
Right.
But we want to suck blood out and check what's going on.
This then, of course, makes it abundantly clear that CMO, somebody who's in charge of the marketing piece and in charge of brand, why it's so incredibly difficult to, prove ROI, and why what did you say, the life of a hamster or something?
Oh, yeah.
It was the CMOs are the shortest. How long do CMOs last on average?
It's debatable. They say 3.8, 3.4, somewhere around there.
Years
yeah.
in each position. And how does that compare to a CEO or a CFO?
A CEO and CFOs are around 8 years.
Okay.
And board members are 8 to 10.
So significantly less.
Yeah.
With a lot of pressure on the portfolio, but very little ability to affect how the brand is performing at the end of the day.
Absolutely. I kind of liken it to the American presidency. Thinking about it took 8 years. Well, I'm not going to mention that one, but
okay.
It takes the first term, the first 4 years. The first year, you're getting yourself oriented. The second year, you're kind of starting to make some decisions. You're getting to figure out how it all works. The third year, you're kind of maybe being able to implement things. And then the fourth year, you're trying to hold on to your job.
Right.
Right. If you manage to hold on to your job, the fifth year, you start to see the progress. Unfortunately, most CMOs don't get into that second term.
Right.
And the other thing is the expectation of results when they happen. So there's this focus on marketing ROI, which is great, but it's campaign ROI.
Yeah.
So
and it's very short term these days too, right?
Exactly.
This is one of our biggest frustrations, is that we have yet to have a client come to us and say, we're investing for anything over a year. And a year they think is a long time. Now I understand, new agency, whatever trial, but even past then, it still seems to go year to year rather than looking at this longer.
Oh, yeah. I mean, I think it's kind of insane when you think about it. If you put in new software, there's a bit of downtime that happens before everybody starts to learn it, get on board about it.
At the beginning.
Exactly. It's a horrible thing. And when you look at it, how long is it going to take those folks to actually be super proficient at that?
Yeah.
So do you expect your ROI within the next year? Probably not. If it's the same piece of, like learning a new piece of machinery or any of that stuff. So why isn't it any different? Exactly. So why isn't it any different for brand?
Yeah.
The other thing that they don't think about is the sales cycle. So recently there was a third quarter earnings for a company, and I noticed that their sales guy, who'd only been there for the first 3 quarters, is gone. But their sales cycle is 18 to 24 months. So they were expecting to see a change within the first 3 quarters of him being there.
Oh, wow.
Even for a salesperson, that's not a fair thing, especially when you look at your life cycle. Yeah. So one of the things brand economics does, it considers the time frame of your customer life cycle so that you can actually forecast when you're going to see ROI. And it takes a brave client to do that, to be able to say, like, I'm prepared to wait 2 years for that. And that's why having the CFO involved in the brand economics discussions is so important, because then they get to see all the work that goes into it, all the financial work that we do to be able to actually prove it and then say, like, manage expectations of when you can really see fruit from your labors.
Yeah, one of my favorite quotes that you had was, marketers talk about knowing your audience all the time, but they're missing who their audience is, and that's the CFO. Like, how do you, communicate to that audience and make sure that audience is understanding and you're connecting?
Yeah, because we keep changing the language. I mean, we talked about purpose. It's all about the purpose now. It's like, well, before that it was called a mission.
Yeah.
And storytelling.
Storytelling.
That's copywriting.
Yeah.
Like we try and recreate these things and create some mystique around it. And I think that actually gets more frustrating for our internal audiences. Like, so wait, we don't have a mission now. We have something else, and take the mystique out. I mean, they don't change accounting names year after year. It's called the same thing.
Yeah,
so that audience does not like change.
Oh my God, right? That is so true.
A balance sheet is a balance sheet. Like, it doesn't change. So how do you create a language for them that allows you to do that? Talking about awareness and numbers are great, but then take it that next step further and say, okay, well, what about conversion? And what other factors did you consider in the conversion calculations?
Well, and the whole growth versus sales. And I just feel like there are probably a lot of people in that position who, get thrown into that position with high expectations, who feel like they have the need to perform immediately because of those short cycles, wave their hands, talk these sort of big efficiency, blah, 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 blahs. And, 3 years later, the CFO is like, yeah, so there was a lot of hubbub, but...
Yeah, and I don't see it actually extending our lifetime on as a CMO. Yeah. So I think it's, 37% of marketing budgets now are spent on MarTech and measurement. I don't see our lifespans getting any longer as a result of having better data. So what is it that's going on?
Yeah.
Right? We've got to find a better way to up our financial literacy and be able to talk at a board level.
Yeah. What I love about what you guys do, and I'm going to get you to talk a little bit more about your process. I know that some of it's going to be secret sauce, so I get that because it's really fascinating. But what I love about what Strata does is, like, you lay the groundwork to build a strategy on top of it, right? So quite often, and we talked about this, and Carlos and I talk about this all the time, is the issue with leading with tactics. Is like, oh, this is the hot new thing. This is going to be the answer. Oh, we need, like you said, they're spending all this money on MarTech and measurements and thinking programmatic and whatever else it is that, like, look at how, all these case studies about the success of using this tactic without really testing to see if that's, if like awareness is their problem, because it might not be the problem at all. It might be that like you said, it could be as simple as, you go to the website and it keeps breaking. So like you can't end up ordering anything, or you go into Sephora and the salespeople are like, yeah, I don't know much about that product, but you should try this product over here, right? So there's a lot of ways in which you should be pulling the lever rather than just throwing more money into these tactics. So that being said, do talk a little bit, because it is fascinating. Like, how do you uncover? And it looked like it was a lot of it was bespoke. Like, it's not like you run through like some machine, though. Like Mark is a finance guy. He uses like an algorithm in the background to crunch numbers, but a lot of it is very manual and very bespoke with what you do. So, like, kind of walk through a little bit of a situation without, of course, giving away your secret sauce.
Absolutely. We really have 4 pillars to the brand economics model. And so usually most research or most measurement has 1 or 2 of these pillars, but not all of them integrated. And so the first one is just, what are the interactions people are having with your brand? So a campaign one will do an interaction measurement of, a specific campaign on digital or something on outdoor. You'll have a 1-800 number or whatever that might be. So, but we don't just look at that. We look at all of the things that people interact with. So we're looking at things like product reviews, things like commentary. So some people give us their sentiment analysis, and we integrate that into it for all of the digital.
Do you do secret shopper stuff ever, or have you? Or
we haven't been asked to include any secret shopper yet.
I could see that would be valuable for some brands. It
absolutely could be. And so we have external data that's given to us from the client, and then we collect our own data from doing outbound surveys. So that's the very first thing, is just finding out all of the different touch points that are possible. It could be for banks going into a branch, online, it could be word of mouth. So it isn't just marketing. That's the whole thing. So, did you talk to a salesperson? My grandmother's mother's aunt down the road, as deep as we can get, knowing that. And that comes from doing interviews with all of our clients on the executive level and a few on the customer service. So we really get a sense of all those things. Plus, we include all the things that they didn't say. So just because you're not in there, like we had one client where, nobody in our industry does radio. I'm like, well, we're going to put radio in. Yeah. Because not only can we test whether radio is, just because it's not being used, we can actually test, well, could it actually be the better media for you? Right. Whereas people just tend to test the media that they've already been in or what the industry uses. We're like, no. Let's see what else is out there and put it in.
Yeah, that's smart. So clear blue ocean.
Everything you can imagine. Yeah.
So pillar 1 is how your customer can interact with your brand.
Yeah, in every kind of way conceivable. Okay. So the next pillar really is talking about perception. So any perceptual study that you've seen before is familiar, and that is the basis for it. Sometimes clients give us their perceptual data, which is great, and we can go in and fill in the gaps. But the perceptions, we want to make sure that they aren't an off-the-shelf list of perceptions.
Right.
Again, so a lot of research methodologies have, recommend or have, trustworthy. No. There are specific things to your category. Mm-hmm. And what we're trying to understand is, what are the category expectations in terms of perceptions? So most clients give us their own. And we do a whole lot of desk research to say what else is going on in the world. And again, expand and customize that list.
Like kind of a QA of the experience.
Exactly. Yeah. So, what's the point of putting in the list that the client has already, because that's what they're already predisposed to? No. We're going to add other things. Where it gets really interesting is the next level. The next pillar is actually behaviors. And that's where most research lets down most clients. The behaviors that are being used to measure are things like recommend, NPS scores.
Yeah. I'd love you to talk about NPS scores.
That's a whole other session, which is like 2 soapboxes, one for each of my little feet. Yeah. And but honestly, like it's very frustrating. Or they look at the awareness numbers and say, well, high awareness means that, or likelihood to purchase. None of those actually prove.
I found this out because I don't do that kind of research. But when we were doing the Super Bowl study, we looked at likelihood of purchase. Doesn't actually say, are you likely to purchase this? Like, it's like kind of more of you're doing something that seems like something somebody might likely do that would be purchasing down the road. And it's like, that's too far removed for actually using that.
Yeah. And so part of the things that we do are things like yes, we'll look at likelihood, and then we'll actually ask, what did you do?
Yeah, exactly.
And reconcile those things. And that's the big thing, is reconciling what you said you did or what you said was important versus how you actually behaved. And again, we go through the client and we go through the entire continuum of all the activities that lead up to conversion. So it could be I downloaded a white paper, or I went to an event. And each of those things on the continuum actually have different conversion rates. So you can kind of look and say, wow, the likelihood if somebody walked into a store and interacted with me is actually financially worthwhile versus somebody who just went onto the website.
Right.
So things like, oh, we got 100,000 visitors. Who cares? Right? Because if nobody bought, it doesn't matter. It's not as valuable as creating a behavior that is much closer to the conversion.
Well, I'm sure you also look at sort of the customer lifetime value of each of those channels too, where like maybe being in the store creates a repeat buyer scenario versus like buying online as a
Absolutely.
one-time. Yeah.
And so the magic of those three pillars, before we even get into financials, it's so exciting, is being able to work mathematically backwards and forwards in those pillars to see the causality. So in the case study that we presented up at the gathering, it talked very much about, wow, this perception they thought of we're number one with, Gartner. That's great. We're going to talk about it. But when we did it ranked very low in terms of importance.
Right.
And then on top of that, it ranked low in terms of converting people.
Yeah.
So why would you spend time on that? So most research would
Like
just
an
say,
NPS score.
exactly. So most research would generally say, hey, you're doing great on this score. Keep going.
Yeah.
So how is that strategically the best way to make a decision if you don't know how people behave? So the last pillar becomes like the money, which is really the money.
Show me the money.
It is totally about showing me the money and saying, oh, if I use this interaction, it's going to create this perception. This perception actually is strongest for delivering this behavior. This is the ultimate behavior. This behavior, why it's the ultimate behavior is because financially it's the most lucrative. Right? So those kinds of things, being able to work backwards mathematically and forwards to see where the information is and then link it all back and create different maps for, if this is your ideal customer, this is the map that you need to follow. Or if this is the financial outcome that you want to do, this is how we work backwards and say, this is how you should proceed with your strategy.
Now, any client that you would work with would need some sort of data base. So it couldn't be somebody who's like, I've got a new product idea.
We could.
We could
do white space. We can totally explore white space.
Interesting. How do you do that? Like just like surveys and
we do. Yeah, all of this is done through firsthand quantitative research.
Interesting.
And what people think of when they think of new products is, oh, well, there's no competition here. And it's like, there's always competition for share of wallet. When we were doing Cirque du Soleil, it wasn't, hey, are there any other human acrobats out there? It was, what are we fighting for in terms of entertainment dollars?
Right.
So people need to think about when they're looking at new products, it's like, okay, yes, does anybody need a new watch? Well, it's a digital watch, so it's a completely new product. Well, no, it's different, but it's still shared. Like there's an expenditure, there's a certain amount that people are going to spend on a watch hybrid or watch period.
Yeah.
So figuring out who your actual competition is for share of wallet is so much more important than figuring out who the product by product competition is.
Oh my God, I'm sure that's like equally fascinating process.
Oh yeah.
Well, I'm really looking forward to like finding ways in which we can work with you, because these are all the sort of the answers that we'd love to have that layer of insights into our clients' business, because I mean, as it is, we're pretty good at looking at what they're doing and saying, oh, like these things that you're ignoring seem to be where you have the biggest opportunity. They may not be shiny objects, but they're actually very important. And, but like there are so many big questions that we can't answer without understanding where that, that attrition happens, or they're not measuring up, and or people, they're losing basically customers to other brands, whether, they think they're the best in the market or not.
Yeah.
So, so interesting. Where can people find you if they need to find out more? Because I know they will want to find out more after hearing you talk.
Absolutely. I mean, it's Strata Insights, plural, .com. they can definitely reach us there, or I can give out my email address if you'd like. But
yeah, we'll leave the Strata Insights. You're also, I mean, you don't spend a lot of time on Twitter. You do have a Muse with Tracy. I don't know if you use that very often.
Not as often.
I've tagged you and I noticed that you didn't really like. It's Strata Insights that comes and likes my posts.
Yeah. Well, that was also based on research in terms of how much of our audience is actually on that kind of social media. So LinkedIn is actually where we tend to spend the majority of our time, and that's where the decision makers are. So
yeah, for sure. For sure. Well, yeah, LinkedIn, that's a whole other conversation, but LinkedIn is a very interesting platform for this kind of content and growth for our kinds of businesses these days. Well, it's been a huge pleasure chatting with you. I feel like I have a million more questions, and I want to bring you back in the future. But just for now, I'm going to wrap this up. Let people contact you where you may go. Let's go for a glass of wine.
I think that is a very good idea.
Awesome. Thank you.
Thank you.
Well, thank you very much to Tracy Chong for stopping by our office. That was an amazing conversation that I totally participated in.
that was my mind being blown right there.
Yeah. Thanks again for listening to our newly rebranded podcast. And also, that sounds way better in case, for those who've been listening to us, we got new equipment and our mics sound way better than before. Professional now. Thanks for listening. Please let us know what you think of this episode. Please share this episode with that one person in your network that would totally geek out on this. We'd really appreciate it. We noticed that we have a lot of new listeners over the last couple of weeks. Welcome, everybody, and off to the next one.